What's up everyone, this is Emilio with Quick Property Solutions, and today I'm in downtown Detroit, and I wanted to shoot this video to give you some advice if you're interested in investing in Detroit. I'm gonna give you 3 things to look out for, 3 tips that I think if you are flipping houses in Detroit, not rentals, but flips, this will help with your investing so you don't make the wrong purchase, you don't make the wrong investment and lose money. But before I start this video, I wanna say thank you for watching. If you like this content, like the video, subscribe, comment. It helps with the algorithm and it helps me grow this channel and help other investors that are looking to invest in the Detroit area. If you want to support the channel, I do have some courses. The links in the description below. I have a Detroit real estate investing course. I also have a how to wholesale course. If you're an investor looking for contractors to rehab your property, we could rehab your property. If you're looking for some good quality, trustworthy, and reliable contractors, reach out to me. Click on the link in the description below. But before I start, I want to show you the Hudson Tower, how that's looking. It's looking pretty cool. I did a video here about a year ago, and in the video, this was like halfway done, but it's looking like it's coming along. That's going to be a lot of office space, retail space, commercial space. It's going to be pretty cool. So anyways, what I wanted to do is tell you 3 tips if you're looking to flip. And don't make these mistakes that I see a lot of investors make. The first one is, if you're flipping a property, the ARV, which is the after repair value, that's what you have to focus on. Don't focus on the price. There's all these cheap houses in Detroit and you're buying a house in Detroit because it's super cheap. Don't focus on the price, focus on what it's worth when you're done fixing it up. So you're gonna be focusing on the ARV. You don't wanna be rehabbing a house when the ARV isn't at least $150,000. If you wanna stretch it, maybe $100,000, maybe $125,000, but you have to make sure that the comps in the neighborhood are at least $150,000. And here's the reason why, is because if you buy that house for $1,000 and then you fix it up and then you put 50 grand into it, let's say you're all in it for $50,000, right? But if the house is only worth $60,000, $75,000 when it's fixed up, where's your profit? Because when you sell it, you're gonna have to pay commissions to your realtor. You're gonna have to pay your closing costs. You're barely gonna have any profit. Another thing too is that the buyer that's gonna be buying the property needs to get a loan. So if they get a loan, most banks won't lend on properties that are low value because they make money off of the interest. So why would banks aren't scrambling to finance somebody that has a $65,000 house. Actually, I think there are minimums that most lenders have. And I think the minimum is $75,000. So to be safe, I would buy in areas where the ARV is at least $150,000. Second thing, make sure there are at least 2 to 3 comparables. Actually, make it 3 to 4 comparables at the $150,000 or higher. The reason why is because that person that's going to be buying your flip, they're going to be getting a loan. And what do banks do when they want to get a loan? They're going to appraise the house. So if you buy a house and you see one comp for $150,000, the appraiser can't just base the value off of one comp. They need several comps to justify lending you the money. There has to be at least 3 comps. So if you're looking at these areas where there's no houses that have sold, or there's like one house that sold, that's gonna be not a house that you're gonna wanna flip. You wanna find an area that has consistent comps in the area where houses are selling consistently over $150,000. The third thing is days on market. You gotta look at houses and how long they've been on the market for. So days on market is after you're done with the house and it's all rehabbed and you put it on the market, you list it with a realtor, and if those areas that they're selling, they're like, oh, this house sold for $150,000, great. Well, how long did it take to sell? Well, this house took 6 months to sell, and they started selling it at $175, and they dropped the price like 25, like from $175 to $165, $160, $150. They finally sold it after 6 months. Or there's another comp where it took them 3 months to sell. Ideally, you want to find an area where the days on market are pretty short. So let's say 30, 45 days. The days on market in Detroit are a little longer if you were like in the Metro Detroit area. So if you were like in the suburbs, some of those houses literally sell in like a day, right? But in Detroit, it just depends on the area, but make sure that you're buying in a neighborhood where the days on market are short. So to recap, you want to buy houses where the minimum ARV is at least 150,000. And again, it's your call. I want to be at 150,000. If you're like, you know what, this is a nice neighborhood, houses are selling for like 125,000, I'll take that chance. That's fine. Just make sure not to buy these houses where they're only worth 85,000, 75,000. I'm not saying you're not going to make any money off of it, but it's going to be a lot of work. If you're making 20% off a house that's 75,000, you're going to be making $15,000. And for me personally, for all the work that it takes to get to rehab a house and get it ready and sell it, $15,000 to me is a little too low, right? So make sure that the minimum ARV is at least 150,000. Make sure you have at least 3 comps that are selling in the area. There's consistent sales and people are selling houses. The third is days on market. Notice the days on market. If you see some comps and you're like, ooh, look at these houses sold for 150,000. Just see how long they took to sell and see how many price drops they had too as well. That's it. If you guys enjoyed this video, I hope you did. Like, subscribe, comment on the video, and I will talk to you soon. Thanks.